myself Vaibhav. In today's session, we are seeing that dollar index has been holding well after yesterday's gain, and given the fact that dollar index acts as a safe haven in times of turmoil, this is pretty much expected. And given the prevalence of risk-off sentiments, I am considering the possibility of dollar index even continuing to move higher from the current levels. So we will see if there are any emerging opportunities for us to exploit in today's session. If we consider the trading context for the day, the equity indices are in consolidation phase after yesterday's rout, and in today's session, the markets, most of the major equity indices are trading with modest gains. Earlier in the day, the US equity uh, futures were also trading with modest gains, and now, as the session has started, we saw all three key equity indices opening up in the positive territory. If you consider the equity indices for the euro area, the key equity indices, including the FTSE 100, the DAX, and the CSE 40, are all trading with gains, though not substantial, but still that means that in today's session the fall is not extending, and I think that's a consolation point if it were so. Just a while back, we got the existing home sales data, and here for last month, the home sales have shown robust recovery, and the reading of 6 million is actually the highest it has been in last 14 years. So you can say that the underlying strength of US economy is visible in this number, and as the recovery has started and restrictions are being lifted, we are seeing more and more people approaching to get their hands on get new homes, and this is likely to lift the sentiments and also provide some optimistic outlook. And later in the day, we have the testimony before US Congress of Federal Reserve Chairperson Mr. Jerome Powell, and the US Treasury Secretary Mr. Steven Mnuchin. So here for today's session, this is the key event, as we don't really have any other major releases coming up, and also given the fact that we are expecting, the market participants are expecting something substantial on the policy front from Mr. Steven Mnuchin. So mostly the market participants will be interested in getting to know what is the view of Mr. Mnuchin, and as the things stand, we already know pretty well of the Fed's disposition towards the US economy, but on the fiscal front, the clarity is yet to emerge, and also the gridlock is there in terms of the fiscal bills, the stimulus bills. So we will be keeping a close eye on what Mr. Mnuchin has to say on that front. Now let's shift our attention to the technical outlook. Here we will first cover the dollar index, and then we will move on to the USD JPY's technical outlook. Let's start with the dollar index technical outlook first. This is the daily time frame chart, and this extended consolidation has provided the solid base for the dollar index, and now after this long consolidation, we are seeing turnaround happening in the dollar index, and these 2 days moves on the higher side is also adding more reasons. We can say that now the next move towards 95 looks probable, but for us the short to medium term perspective is more important, and even if we don't really see it moving towards 95 in a day or two, still I feel it is better to stay on the long side now, as we have this consolidation, and on the lower side we have seen buying momentum creeping in. So because of that, from short to medium term perspective also, we would do well to stay on the long side. So here for that, I feel that this first resistance, which has now been surpassed, and we have this dollar index holding well above it. So because of this formation on the technical front, we can expect these prior swing high zones and also this first resistance to act as a support moving forward. So as long as the price action is taking place above 93.5, I feel that we should be looking at the opportunities to go long, and at the moment the dollar index is of course again approaching its prior highs, but maybe if later in the day if we get some sort of correction, and if we are fortunate enough to get any entry anywhere closer to this 93.5, we should of course give a thought. Earlier in the day during the European trading session, that opportunity was there, but now again the reversal has happened, and the dollar index has started to move on the higher side. If you consider the regression curve is also pointing on the upside after this extended consolidation. And here we had these 2 weeks of consolidation between the first resistance and the central pivot point, and as you can notice, we saw this consolidation taking place in the bullish territory and then eventually the break on the higher side. So we have a couple of reasons to believe that these sentiments are likely to prevail, and this prior swing high zone along with this confluence zone of 50, 100 and 200 SMAs are likely to provide the immediate support for the price action of the dollar index, and because of that we can feel confident about going long. But of course, the when I say confident, I don't really mean that we should be overconfident. Of course, we need to be taking into consideration the possibility that we might even turn out wrong. In such scenario, the thing we can do is play with the stop loss, and this prior swing low, the area closer to 92.8 should be good enough for a consideration for keeping a stop loss. But right now we have the dollar index trading a lot higher compared to this prior swing low, and a 1 percentage point move is a big move in the currency space. So because of that, what we will need to do is we will need to stay on the sidelines, maybe if in the latter part of the day or maybe tomorrow, if we are going to get any correction. Of course, the correction is not certain, but suppose if we get to see any correction happening in the dollar index, and if we don't really see any break below this crucial support area, we can indeed think about going in for a fresh long position. And I would say that if we see the price action and 50 SMA converging, then that would be an excellent development for new trades. Right now, there is this divergence of almost 60 pips, and because of that, we will have to be cautious while going in for fresh positions, as we have seen substantial up move more than 1 percentage point already taking place, and because of that, I feel we should sit on the sidelines and be patient here. And if we see some sort of correction, and then if the price and this 50 SMA zone converges, that will be a better opportunity to go in for a fresh trade. Moving on to the USD JPY's technical outlook, here we have this extended bearish phase in USD JPY, and after this long consolidation closer to 106, we finally saw this break on the lower side, which eventually pushed the USD JPY towards 104. But from those lows, we have seen sharp recovery taking place, and in a single hour, almost half a percentage point gains were added in USD JPY, and now it feels like the USD JPY is going to enter the consolidation phase after having fallen to this 61.8% Fibonacci expansion of its prior fall, starting from 108 to almost close to 104. So here we can expect the USD JPY to consolidate, and given the fact that we have already seen this substantial down move. We can even bet about some contra trades if we see the risk reward ratio is good enough. So here, coming to the 4 hourly chart, we have this price action caught between this second support and the first support. The levels of 104 on the lower side and 105 on the higher side. The regression curve is still steeply bent on the lower side, so we don't really have much to say that the trend is turning. We are not really betting with the trend. We are actually looking at any opportunities which might arise if the retracement is going to take place. And with that in mind, we will have to basically turn our focus on the hourly chart to see if we can feel confident enough to take the dive and go for the contra trend trade here. So here in USD JPY's hourly setup, we have this immediate swing high coming into play around 104.85, and I feel unless and until there is a substantial break on the higher side, and unless we see the price action also being able to hold above this prior swing high zone, we need to be cautious. But of course we can keep an eye on these, and any possible move on the higher side can be bought into. So there are two ways to go about it. One is that we think about going in for a fresh long position, while going for the entry anywhere closer to this prior swing high, which is there around 104.90. And on the lower side we will need to keep the stop loss just little lower below this immediate swing low. So that is the one way to go about it if you want to trade in today's session. Otherwise, if you are kind of cautious, then I think we will have to wait it out. And if we see the move on the higher side, a fresh break, the formation of higher highs, then eventually, if the USD JPY is able to hold well above this 100 SMA zone, we will have the convergence of 50 and 100 SMA taking place, and eventually the 50 SMA is also likely to cross above the 100 SMA, and at that point in time we can indeed think about going in for a fresh short term scalping kind of trade on the long side in USD JPY, and of course our stop loss will work out pretty much closer to this immediate swing low, and on the high side we can target the price zone of around 200 SMA, and that will give us the risk reward ratio which will be slightly better than 1 is to 1. So here we are not really looking at big moves. We are at the moment basically looking at the retracement, and since this is not a with the trend trade, so I don't really feel we should be looking at big moves being happening in the USD JPY. Rather than that, we can think about scalping trades. So in that manner we can indeed make a decent amount of money in case we happen to be right, and in case we happen to be wrong, of course the stop loss will always be there. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.